All right, so let's dive into high finance, and oil production.
Sounds good.
We're looking at Whitecap Resources.
Okay.
They're exceeding production goals, like 3 times a year,
Wow.
showing low debt, expanding into a hot new market.
Yeah, they're definitely worth a look.
Today, we're going to look at them from an investor perspective.
Makes sense, yeah.
We've got their Q3 2024 report, fresh off the presses. Got their full financials, and of course,
Big word.
their management discussion and analysis.
EMD&A.
That's right.
We're going to dig deep into their strategy.
We're going to unpack it all to help you, potential investor, get a clearer picture of their financial health, where they're headed, and if their stock is right for your portfolio.
Think of this as your express lane to understanding their investment potential.
Love that.
Yeah.
First off, production.
So
Whitecap hit an average production of 173,302 barrels of oil equivalent per day in Q3. That's not just meeting their 2024 guidance. That's exceeding it.
For the third time.
For the third time this year.
This year, yeah.
And they pulled this off.
Okay.
After selling off a 50% working interest in their Musro 0509 facility.
Earlier this year.
That's right.
That's a sign of good asset management.
Definitely.
They're not afraid to divest,
Yeah.
if it means streamlining their operations and boosting production.
Sure.
It's also worth noting their production growth.
Yeah.
It's coming from oil-weighted and condensate-rich assets.
Oh.
Those are highly sought after.
Interesting.
Yeah.
Okay, now dollars and cents.
Let's talk money.
With West Texas Intermediate crude oil prices averaging over 100 Canadian dollars per barrel in Q3, Whitecap's been seeing some impressive returns.
Yeah.
They reported an operating netback.
Okay.
And for those of you new to the term,
the newbies out there,
it's basically the profit they make on each barrel after production costs.
Makes sense.
Of $32
Whoa.
and 59 cents per barrel of oil equivalent. That all added up to a robust funds flow of $409 million.
Wow.
Or 68 cents per share.
Or that cash generation ability.
Yeah.
That's what investors want to hear.
Absolutely.
It means they can cover costs, invest in future growth, maybe even increase returns to shareholders.
Like dividends.
Dividends, share buybacks.
Buybacks, exactly.
All that good stuff.
And speaking of rewarding shareholders, Whitecap has returned $445 million
wow.
to shareholders in the first 9 months of 2024.
Okay.
They're doing this through a combination of dividends, which totaled $326 million, and share repurchases, which reached $119 million.
Their share repurchase program.
Yeah.
That's another good sign.
Definitely.
They're serious about shareholder value.
Okay.
They buy back their own shares, basically increasing the value of each remaining share.
I see.
Which can lead to greater returns for investors.
Gotcha. Adding to the good news.
Oh, there's more.
Whitecap secured an investment-grade credit rating of BBB low with a stable trend from DBRS.
That's like getting a gold star.
It is, isn't it?
From the credit agencies.
Right.
This opens doors to financing.
Yeah.
Allows them to diversify their debt, potentially lower borrowing costs. Which means greater financial stability for investors.
So far, Whitecap seems to be doing everything right.
Yeah. Strong production, healthy profits, solid foundation.
But we got to dig into their future plans.
Of course.
See if they can keep this up.
Okay, so their 2025 capital budget gives us a good look into their strategy.
Okay.
They've allocated $1.1 to $1.2 billion, aiming for 4-6% organic production per share growth.
Wow.
And here's where things get interesting.
Sounds like it's time to shift gears.
Yeah.
See where they're placing their bets.
They're taking a two-pronged approach.
Okay.
First, investing in their existing conventional assets,
the
bread and butter.
Right.
But they're also making a move into unconventional plays, specifically the liquids-rich Montney and Duvernay formations.
Interesting.
Now, unconventional plays, they have potential for high growth, but they also come with higher risk.
High risk, high reward, right?
Exactly, and Whitecap's going all in.
They are.
Allocating roughly 50% of their 2025 budget towards the Montney and Duvernay.
Wow.
They're projecting 10% annual production growth from those assets alone.
10%, huh?
Yeah, 10%.
That's impressive, but
it is.
Unconventional plays, a bit of a wild ride, right?
It can be, yeah.
So how does this all factor into their risk profile for investors?
It's all about balance. They're trying to, capitalize on high growth areas while maintaining a strong base in conventional assets.
Makes sense.
It's like a diversified investment portfolio.
Okay.
You got your blue chip stocks for stability
Right.
and your high growth tech stocks for upside.
I like that analogy.
Yeah.
So they're not putting all their eggs in one basket,
Nope.
which is always a good sign.
Especially for risk management.
Exactly.
Mm.
But let's talk about those conventional assets for a second.
Okay.
How are they planning to keep those operations going strong?
They're not neglecting them at all.
Good.
They're investing $550 to $600 million
Million.
to drill 190 new wells
Wow. Where?
in Alberta and Saskatchewan.
Okay.
And it's not just about drilling more, it's about drilling smarter.
Oh, okay.
In their Western Saskatchewan Viking play,
Yeah.
they're shifting to extended reach horizontal drilling.
What is that?
It means they can access more oil and gas from each well.
Oh, I see.
Yeah.
So increased efficiency, higher profits.
Potentially,
What kind of returns are they expecting to see?
get ready for this.
Okay.
They're projecting an 11-month payout period on those Viking wells,
11 months.
assuming a WTI price of US $70 per barrel.
So they could recoup their investment in less than a year.
That's the idea.
That's amazing.
It really shows their focus on returns.
Yeah.
Yeah, and it highlights their expertise in conventional production.
So we've got impressive growth projections from unconventional plays and strong, consistent returns from conventional assets.
Sounds good.
But no investment is without risk, right?
You got it.
What are some of the potential challenges or headwinds they might face?
Well, commodity prices, they're always a wild card.
Yeah, of course.
WTI oil prices have been strong,
Okay.
but natural gas prices, specifically AECO prices,
Yeah,
those are expected to remain weak.
in the near future,
Yeah, which could impact their profitability.
especially from their gas-producing assets.
Exactly.
So oil prices looking good, natural gas, not so much.
Pretty much.
Anything else?
Well, they're also dealing with tax reassessments
Oh, right.
from the CRA and the ATRA.
What's that about?
It relates to a former subsidiary.
Okay.
Adds a bit of uncertainty to their financial outlook.
Taxes, right.
Always gotta love those.
But seriously, how big of a deal are these reassessments?
It's definitely something to watch. Whitecap is confident in their position.
Right.
They're actively defending it,
Good.
but the potential impact is still unclear.
So we've got fluctuating commodity prices,
Mm-hmm.
uncertainty around AECO gas prices,
Yeah.
and these tax reassessments.
It's a lot to consider.
It is. But let's zoom out.
Okay.
Big picture.
All right.
How would you sum up their overall financial health?
They're in a surprisingly strong position.
Really?
Their debt to EBITDA ratio is very low,
How low?
0.6.
That's it.
Yeah, much lower than their peers.
Wow.
Suggests they're managing their debt well.
That's a good sign.
It is.
Means they're less vulnerable to those price swings,
Exactly.
which is comforting for investors.
Definitely.
So low debt,
Mm-hmm.
exceeding production targets,
Yep.
commitment to shareholder value,
Mm-hmm.
and expansion into unconventional plays.
It's a compelling picture.
It really is. But are there any hidden gems or red flags?
That's a great question.
Yeah.
It brings us to an important point. Discerning investors look beyond the headlines.
They dig deeper.
Exactly.
So let's get into the nitty-gritty details.
Let's do it.
What should investors be paying close attention to?
Well, let's revisit their production breakdown.
Okay.
They're showing impressive overall growth,
Right.
but we need to look at the composition of that production.
What do you mean?
Are they increasing oil production, which has higher prices?
Okay.
Or are they seeing more growth in natural gas?
Which is facing those headwinds.
Exactly.
So it's not just about the total barrels.
Yep.
It's about the specific mix.
Oil, natural gas liquids, natural gas.
That makes sense.
We need to see if their production growth is aligning with the market.
Where can we find that info?
Their MD&A should have it.
The management discussion and analysis.
Yeah, it'll allow investors to assess the profitability of their production growth.
Okay, so the production mix is one thing to watch.
Right.
What else?
Their capital allocation strategy,
Okay.
they've given us their overall budget, but how are they splitting those funds?
Across their different projects.
Exactly.
So we're looking for clues about their capital discipline.
Basically, are they prioritizing higher return projects?
Or are they spreading themselves too thin?
Yeah, that's what we want to know.
Capital allocation is a key indicator of management confidence.
It really is.
We want to see them prioritize projects with shorter payout periods
Higher internal rates of return?
and lower risk.
Yep, all of that.
Investors want to see their money used wisely.
Of course.
Any of the red flags in those financial statements?
Well, we can't forget about those tax reassessments.
Right.
They're confident.
Yeah.
But investors need to understand the implications if those rulings don't go their way.
What kind of information should they be looking for?
Specifics about the potential size of the liability,
Okay.
the timeline for resolution,
Uh-huh.
and their strategy for mitigating the financial impact.
So investors need to weigh the downside risk
Absolutely.
and look for transparency from Whitecap.
That's key.
It's amazing how much detail is hidden in these financial reports.
It's like peeling back the layers of an onion.
Hopefully without the tears.
Uh-huh. Exactly.
That's why these deep dives are so valuable.
They help us understand the nuances
The nuances that drive a company's performance.
and their value to investors.
Okay, so bottom line,
Yeah.
for potential investors considering Whitecap,
What's the verdict? Is it a buy?
well, they offer a blend of current income and future growth potential.
Okay.
Strong track record, healthy balance sheet,
Mm-hmm.
commitment to shareholder value,
But there are always risks.
of course,
Investors need to weigh those risks carefully.
especially the impact of weak AECO gas prices.
And the tax reassessments.
Can't forget about those.
So due diligence is key.
Absolutely.
Understand the company's strategy.
Yep.
And make sure it aligns with their own risk tolerance and goals.
That's investing 101.
It's not just about finding a company with potential.
It's about finding the right fit.
The right fit for your financial situation.
It sounds like Whitecap has a good story, but with some risks, you know.
Yeah, exactly. Got to consider those.
Informed decisions are the best decisions, right?
Always.
To help us make one,
Uh-huh.
let's step back. Big picture.
Okay.
Something that wasn't in the reports.
Okay, I like this.
Let's hear it.
So Whitecap, they're expanding oil and gas production.
Yeah.
Big growth projections, right?
Yeah.
But we're also seeing this global shift. Renewables, clean energy.
Yeah, that's a big one.
So how might that impact Whitecap's long-term strategy?
And their appeal to investors, yeah.
Exactly.
It's a big question.
It is.
The oil and gas industry is under scrutiny.
Mm-hmm.
The world's trying to,
Reduce their footprint.
reduce their footprint, yeah.
Lower emissions.
So investors are looking for companies that are sustainable,
Sustainable, yeah.
aligned with the future.
That's the trend.
It's a complex landscape, though.
It is.
Oil and gas will be around for a while.
Yeah, it's not going away overnight.
But the transition is happening.
It is. It is.
How is Whitecap preparing for this?
Good question.
Are they investing in new tech,
To reduce their impact, yeah.
exploring renewables?
That's what we want to know.
These are crucial questions.
Especially for long-term investors.
A company's ability to adapt,
Yeah.
to innovate,
Mm-hmm.
will determine their success.
In the long run.
It's not just about oil and gas anymore.
But yeah, more than that.
It's about sustainability.
Responsibility.
That's what investors are looking for.
They want to see that commitment.
So, as we wrap up this deep dive,
Okay.
I encourage all you potential investors,
Mm-hmm.
don't just analyze the numbers.
Right.
Consider the bigger picture.
The long game.
How is Whitecap addressing the energy transition?
Yeah. What's their vision for the future?
That's what will separate the winners from the losers, right?
Absolutely.
This deep dive has given you the knowledge
The tools,
to assess Whitecap,
their financials, their strategy.
their risks and rewards.
It's all there.
Remember, knowledge is power.
Especially in investing.
That power can help you build a better financial future.
Couldn't have said it better myself. Happy investing, everyone.
May your portfolio be ever in your favor.